Hello and welcome to everyone joining us today. We're going to be talking about carbon neutrality and net zero carbon and the importance to junior miners and more importantly to retail investors. So we're going to be ably assisted today in understanding those by Martin Chiran, President and CEO of FPX Nickel Corp, Mark Selby, and CEO and Chair of Canada Nickel, and Jason Jessup, CEO of Magna Mining. Gentlemen, welcome. If I may ask you to just give us a 30-second elevator pitch on yourselves today.
I'm Martin Chiran. I'm the CEO of FPX Nickel. FPX is a Vancouver-based company trading on the Venture Exchange. We're focused on the development of the Baptiste nickel deposit. It's a PEA stage project in central BC. It's one of the largest nickel deposits in the world. We're moving forward on a preliminary feasibility study, and all of that models, very large scale nickel production at low cost and at low carbon as well.
Mark Selby, Chair and CEO of Canada Nickel, advancing the Crawford Nickel Project, a new sulfide discovery that is the largest sulfide discovery since the early 1970s, rapidly advancing towards feasibility study at the end of this year.
Hi, I'm Jason Jessup, the CEO of Magna Mining, trading under the ticker symbol NICU on the TSXV. Our flagship asset is the Shakespeare project, which is a past-producing nickel copper PGM open pit mine with major permits for the construction and recently released feasibility results on that.
Martin, why don't we start with you, if I may? We'll get onto your project in a second, but obviously, people are used to hearing, or certainly getting more used to hearing these phrases: carbon neutral, zero carbon, and net zero, and they kind of find it interchangeable. They don't quite mean the same things. How are you managing one, or any of those things within your organization to your advantage?
Yeah, so we're focused on the development of a very large nickel deposit that's located in central British Columbia. Like most of the Canadian nickel projects, we will benefit from the availability of hydroelectricity, which leads to a very low sort of what we would call gross carbon footprint for the production of nickel from this operation. And then, as with Mark's project and some of the other projects in Canada, mineralogically, we benefit from the fact that our host rock contains minerals that will absorb or mineralize carbon dioxide. So you take that gross carbon footprint and you have the potential to render that even lower, potentially down to zero, or in some circumstances, net negative. And so this idea of producing low carbon, zero carbon, or even net negative carbon would be revolutionary for the nickel market, and it's an opportunity we're keenly focused on.
Mark, you've got something similar happening over at your project, haven't you?
Yeah, no, I mean that's as Martin pointed out, the opportunity here is this entire sort of class of ultramafic nickel deposits has this great advantage. A lot of people talk about sort of net zero, and it's okay. Well, we're going to produce a lot of carbon, but we're going to go buy a lot of carbon credits, and we'll kind of get to zero. The nice thing with these types of projects is we can get actually inherently within the project boundaries itself to a place that is zero carbon. As Mark pointed out, we've got these rocks that spontaneously want to absorb CO2 when they're exposed to air. So, we think in terms of mining companies' portfolios, these are going to be critical anchor assets going forward if you really want to have a low carbon asset portfolio going forward.
And what about you, Jason? I mean, when the project's just kind of kicking off, companies just getting going, is this a distraction?
Yeah, not at all. We think it's a really important part of our strategy moving forward. And as both Martin and Mark had pointed out, we're fortunate to be in a jurisdiction that has hydroelectricity power. And we just completed a feasibility study that has calculated our greenhouse gas emissions. And we think it's something that does make us stand out. And I think any junior company, and especially in the battery metal, nickel, cobalt space that has low greenhouse gas emissions, it's going to be a preferred product for future end users.
Right, because I mean, and Martin, just in the context of we talked about ESG, but also in terms of there are groups, NGOs, etc. Perhaps anti-mining. There are swathes of people who don't like the idea of mining. Does this help in a narrative or a conversation with people who are not perhaps that mining friendly, or certainly wouldn't want to invest or be associated with mining?
Yeah, it's not simply narrative, Matthew. It's something I've been thinking about and really saying for years now, is that the staunchest environmentalists should be the staunchest supporters of responsible mining, because we cannot, as a planet, as global economy, achieve the targets of the Paris Accord in mitigating carbon emissions without mining. And so mining actually, without wanting to sound too grandiose, mining can help save the planet in that way. So we see a huge kind of overlap of interest between those environmental concerns and the concerns of the mining industry, and therefore of investors.
So, but you decided to take this into your own hands somewhat, and you've just announced, I think today, CO2 Lock Corp. What's that about?
And so FPX has established a new subsidiary, as you mentioned, CO2 Lock Corp. And the vision and mission of CO2 Lock Corp will be to explore for and develop mineral deposits for their high content of brucite and other magnesium minerals that sequester CO2. This is the content of mineralization that Mark mentioned earlier. The brucite and these minerals have never really been explored for on their own, and we think there's a world in which high grade brucite deposits can be profitable operations for their ability to sequester carbon dioxide. So at a given carbon price, you could mine for high brucite content mineral deposits and have profitable operations simply for that, with no attention paid, let's say, to any byproduct credits for nickel or other things that might come along with those deposits. So this is it's a bit of a kind of R&D moonshot, but we think something that more rightly sits in a separate standalone vehicle. But for FPX shareholders, it gives them some upside and some access to any intellectual property that would be developed in pursuing this concept.
Now, Mike, you seem to want to make the distinction between companies which, there's going to be a massive carbon credit market, I suspect. We're going to see lots of new companies, lots of new consultancies springing up left, right, and center. So a move like Martin is suggesting seems sensible. You're a little bit more in control of the whole process. How do you see the landscape evolving in this sense? Because there's not just miners who are going to leap aboard this, but others too. So what's your take on it all?
Oh, no, I mean, I thought it was an absolutely brilliant move by Martin and FPX. The key qualities of these deposits, I mean, they're very large scale. So you literally have billions of tons of material with the potential to, sequester kilos of carbon, per ton of that material. And so to, specifically draw attention to it and unlock the value there is, I jokingly talk about, when you look at carbon prices climbing up in various jurisdictions, that, all of these, I'll have a carbon, I'm going to have a carbon credit mine with a nickel byproduct is, where, at one point you could actually, look at getting to. And again, I think separating out like that is brilliant. There's a company right now that gets a lot of attention in Iceland called Carbfix, and they're going to a huge amount of work to basically create a giant soda stream machine that injects CO2 and liquid into in situ rock, underneath Iceland. And so the fact that we process this rock to recover the minerals we want, and then create more surface area that accelerates that. And again, this is a really nascent area in terms of research. So being able to have a vehicle that can do it. The U.S. Department of Energy has a huge research budget around carbon capture and sequestration. And again, the same type of program that they spend billions of dollars to develop defense equipment, in the U.S. is the same sort of approach they're using with carbon sequestration. So it's an extremely exciting development.
And Jason, I'll come to you next. So the two other guys have got a route with the kind of sequestration component. Not all companies can do that. What's your approach to this? What kind of conversation can you have with investors around this topic?
Yeah, so we don't have the type of rock or waste rock we produce that would actually sequester CO2. So we're a typical sulfide nickel deposit like the other deposits in Sudbury. But the benefits that we have is we're 8 kilometers away from a hydroelectric dam. We'll have a dedicated hydroelectric, essentially zero greenhouse gas emission power supply. We have a very small footprint. So our haulage trucks, are going to be traveling a very short distance from our pit to our mill. And really with our project, diesel fuel is the largest contributor to greenhouse gases. Now we've looked at things we can do like using biodiesel, for example, which still produces greenhouse gases, but the plants that are used, that are grown to create this biodiesel also capture CO2. So essentially it's net zero. And the other thing is that, we're fortunate to be in a region that has 2 active smelters, which have very high standards run by very reputable mining companies. And so to move our concentrate from our site to those smelters has very little emissions as well. So there's a lot of things, we have in favor. And I really applaud, Martin and other companies that are looking at developing new technologies and ways to capture carbon. And we need to keep investing in that as a society. And I think it's very important. The reality today is there's a demand for battery metals like nickel, and we don't have all those technologies in place yet. So we have to, with Magna, for example, and Shakespeare, we have a project that's largely permitted and could move into production very quickly. So we look to minimize, that impact, and we've had very positive reception from what we've done so far by measuring our impact and then finding ways to offset it through carbon offset credits and other means. And groups like Mitsui, for example, who we announced we're in discussions on an MOU as a JV partner. That was one of the criterias that really impressed them, and one of the reasons we are in discussions.
So it's interesting to me because you've got a whole bunch of audiences to try and appease as CEOs of public companies. And we had a conversation a couple of weeks ago with a journalist who wanted to do some copywriting for us, and they refused because we were asking them to write about a mining company on their laptop, which had been made with materials dug out of the ground. Didn't want to do it. How much more do you think companies need to do to kind of win people over and say, like, mining is not perfect, but we can make it better than it is? Is that enough of an argument, or is there a long way to go for mining companies? Do you think, Martin?
Yeah, there's still a long way to go. This is sort of a public relations battle that the mining industry has been on the losing side of for probably going back over 50 years now. And the large, and really, I would suggest that the responsibility here really falls on the shoulders of the most well-endowed companies, of the largest companies in the world. I think should have huge self-interest to mount, strong lobbying campaigns with governments globally, as well as public relations campaigns with the public at large. If you look at the largest diversified mining companies, there are certain countries in which they cannot operate. Countries where maybe Chinese interests can operate and can operate arguably in sort of questionable means through the provision of large bundles of cash in manila envelopes and that sort of thing, which Western mining companies cannot. So there are a subset of countries that the Western companies can operate in. They need to make sure that they have an enduring ability to continue to operate in those countries for generations to come, or else they won't have businesses anymore in 20 or 30 years from now. And the mining industry will be utterly dominated by Chinese interests going forward. So there's an existential reason, I think, for large mining companies to spend a lot of time, energy, and money, frankly, on lobbying and on PR efforts around showing that we can be part of the solution, and we're actually a positive environmental contributor in a low carbon economy.
So, Mark, what do you make of that kind of need for sort of joined up thinking, as it were? We see companies like Tesla take all the plaudits and accolades, yet we've got reports this week of them potentially, not confirmed, teaming up with Vale to secure their nickel supplies going forward, because supply chains are going to become problematic. Should others take the strain?
No, I really like the way Martin put it. Is the major mining companies need to help own the reputation for the industry to be able to enable it going forward. I mean, what the war in Ukraine has unfortunately really driven home is that having resource dependence on economies run by people who are diametrically opposed to our underlying fundamental values on a range of fronts is just a bad idea. So I think now there's a new opportunity for governments and so forth. And again, if mining companies step up in the right way to be able to rewrite some of the opportunities there to say, yeah, we need to have, if we want these materials, we need to mine them at home, process them at home, and so that we can sell them, at home going forward. So, I think that literally because the war's been only going on a month, I think those conversations are starting to happen now. And so it'll be really interesting to see how those, evolve over the next 12 months. What we absolutely, need to not do. And unfortunately, the major mining companies, seem to do it, every time. Airlines are able to, keep planes in the air 99.999% of the time. And yet the mining industry, the tailings dams failures in Brazil, the fact that Rio Tinto blew up a, ancient First Nations village that had been there, for 5,000 years and blew it up to mine a little bit of iron ore, that kind of stuff does not help the industry at all. And again, I'm hoping that, that this is a way to reset the story going forward.
Okay. So Jason, I'm looking for a company like yourself, you want to do things the right way. It potentially costs, well, it certainly takes a bit more time and planning. It potentially costs a little bit more money, or you're going to tell me, or does it? But are you seeing like the Canadian government, either provincially or federally, kind of stepping up and giving you tax breaks, incentives, or credits against that particular part of the investment in your business to be able to do it the best way possible? I'm trying to work out, is there money available? Is money cheaper if you want to do things the right way?
Yeah, and I think that we're not quite there yet in Ontario with our government. I think there is a very supportive government towards mining, and they are implementing strategies, and they're not quite there yet. But we have seen, a lot of positive news lately coming out of Ontario for their strategic metals initiatives, and I do hope that there will be, a lot more support going forward. That being said, I don't think it's, does it cost money to do the right thing? I think doing the right thing is the only way we can move forward. And companies that aren't doing the right thing, as both Martin and Mark mentioned, they're not going to have the local support. They're not going to have support from investors and ultimately from the major companies that may buy these junior companies. So doing the right thing, I think, is the only way to do business, even though, it does sometimes cost more. But really, it's about building that right culture and starting off on the right foot. And it's not just the majors who really need to lead by example. I think it's all of us and in the junior companies as well.
It is, but not everyone does do it the right way because, I guess everyone has a different management style and there are different management teams that perhaps maybe cash constrained and put under pressure to make the wrong decision. So I'm wondering, as an investor, what should I be looking for in a business to feel that I'm investing ethically, that I'm investing in a company with the right strategy when it comes to this topic? And like I say, it's a subset of the whole ESG agenda, and we've heard varying and diametrically opposing views on and thoughts on that one. So, Martin, what's your take on what you look for when you're investing? You're not just a CEO, you're an investor too.
Yeah, well, I think the great thing about this sector, the junior end of the spectrum, is that any investor, no matter how small, should be able to get on the phone and call up the company and ask to speak to the CEO. And the CEO, in every case for our strata of companies, should be able to make time for that person. So it's available. We are available to investors to talk to. No one should feel like their investment is too small to actually have some time with the CEO to ask questions. And, I think a key question, particularly for Canadian projects, is, what is your status of your sort of consultation and engagement with First Nations? And feel free to ask very pointed questions about that. How involved is the CEO in that? Or are they just kind of pushing that off to consultants or to people lower down the food chain? I think it's really important for CEOs to be, very much involved in that. And in my view, if they're able to answer questions in that regard, then that should tell you a little bit something about, how they treat your people generally and important kind of partners. And that's what the First Nations are, I think, in all of the projects here that we're talking about. Okay,
Canada, that's a particularly big topic, has been for a while. We're starting to see instances where companies perhaps are, falling foul of understanding it themselves or doing it properly. and it's sometimes hard to mitigate against, and sometimes not necessarily the company's fault. But what are you doing, Martin, specifically that has enabled you to kind of operate with some degree of freedom and with the blessing of First Nations where you are?
Yeah, I mean, I think as a general concept, the idea that companies like ours need to be consulting with local First Nations, identifying the First Nations before even reconnaissance exploration activities begin, and have those discussions be led at the CEO level. It's a real sort of sign of respect, I think, to local communities that, it's not low-level functionaries or consultants who are doing that work. And so in our case, that has been sort of the MO of FPX, really dating back to 2007, before we ever set foot on the project, to do that early reconnaissance exploration. With my predecessor and now with myself, these are responsibilities that sit at the center of our plate. It takes a lot of our time, but everyone in the community there has my email address, has my mobile phone number. They're able to contact me. I contact them. It really is important, I think, for the CEO to be directly engaged in that file.
In those conversations, if I may ask, is the carbon capture component or the zero carbon, or these kind of broad headlines, which that funds look for as they rebrand themselves with the ESG credentials, that they need to tick a box for to be able to allocate capital. When you're talking to First Nations, how big of a consideration is it for them? Do they care, or are there more important things ahead of that?
There are definitely far more important things. I think it's a nice to have for them, but carbon mitigation is has a global impact, whereas the development of a very large industrial site has a very local impact, right, on the landscape there. And so those impacts, those local impacts, are by far the most paramount for the communities that we partner with.
Okay, so Mike, here's a question for you. CO2 lockup done by FPX. It's a really nice idea. You guys have got something similar going on. You had your own sort of net zero initiative at the beginning of last year, as it were. Yeah. Do you think, because you guys are going to, be able, you're more than dealing with your own needs. You've got enough to sell this off into the market. These kind of carbon capture type products for other brands, etc. Are we going to see mining companies in association with, or Tesla in association with, said whatever nickel company, carbon capture company? I'm trying to work out how do you kind of up the ante in terms of awareness? How do you up the ante in terms of association with some of these bigger brands, and therefore deal with some of the more negative connotations around mining for some of the people out there?
Yeah, I think one of the key things there is really collaborating with other groups who've got a brand in the space already, and so that to me is exciting about some of the the research that we're doing and some of the groups that we're looking to be working with to be able to effectively get that sort of brand rub off on the company, and then two, again, this is still a really relatively early area of work. There's lots. Again, the size of the prize is huge, and so the more smart minds you can get in the room and work together and share ideas and so forth, the better it is for the company. So again, you want to be investing in companies that are thinking about this today. And getting themselves, as best positioned, to be one of the leaders in the space going forward.
But what makes this better than, say, someone offering to sell you carbon capture from a forest, 100-hectare land package in Brazil, which was already in existence, which was already doing that job, versus this, where you guys are digging up rocks, more surface area on those rocks, and they're absorbing carbon credit. Is it better, or is it different? I mean, where would you put it?
It's just so much inherently better. Like you can say, this is our project, and within this footprint, we are zero carbon, or again, we think there's a potential to be net negative carbon. So we're improving our project. Is improving the planet's carbon footprint, is a pretty powerful statement to be able to say.
Yeah, I would just, sorry to jump in there, but
yeah, no worries.
The key word is that it's permanent capture of CO2. It's permanent capture of CO2 in a forest is not permanent. At some point, those trees will die naturally. There will be a forest fire. They will be cut down. And so a carbon credit associated with that carbon capture has a shelf life, and it leads to a fairly low value credit. The permanence of carbon capture, where you're mineralizing the CO2, you're locking it away on a geological timescale, means that these will be particularly high value credits. And to your question on sort of partnership, and I think Mark's answer was great there. There are a lot of, high carbon emitting industries out there in Canada, in particular the oil and gas industry. They have a major, major carbon problem they need to deal with. They're going to look at a lot of different approaches, kind of an all of the above approach to funding different technology approaches to dealing with this issue. And so, we see the potential with CO2 lock for collaboration, certainly with those types of groups, because they've got a massive problem. Again, it's existential for their businesses to get to mitigate carbon.
Yeah, I kind of find it interesting in that we know from, this is history repeating. It's just a different topic. The number of consultants will increase, and the number of products will increase, and some will be significantly better than others. And we have to kind of almost like a hierarchy or some kind of ranking or qualification against what carbon capture is, what carbon credits are, and hope that retail investors can actually understand the difference and not get sold a dud along the way. Jason, I mean, obviously you're listening into this, but you're playing your own furrow, as it were. You've got to answer these questions like a lot of miners do, not just for your current shareholders, but for new shareholders stepping in. I guess you do have the luxury of saying at least you're in the right space, you're in battery metal space, but there's a higher expectation on you guys than there would say with certainly coal necessarily or precious metals. So do you feel that pressure to have to step your game up even more? Yeah,
I do. We do for sure. And we think, because the metals we'll be producing will be so important into the EV future and the impact that's going to have globally on climate change. We really do want to be a leader in that field. And, we think that what we are doing right now, and we hopefully will have the technologies in place where we can have absolutely, not just net zero, but zero carbon emissions in the future. And that's what we're striving towards. But in the meantime, over the next 5 to 10 years, we hope to be producing very low carbon nickel. And when I say very low carbon intensive nickel, compared to the broad nickel industry, including, the laterite ores, and other jurisdictions that are still producing, what we estimate will be 10 times more than what we are estimating to produce from Shakespeare. We think that we're on the right track. We think that's really important, to be able to supply those metals in a very low carbon fashion, and especially for end users. And you mentioned Tesla and, this potential deal they have with Vale. And, we obviously know Vale very well as being a big operator here in Sudbury, and they've made tremendous efforts to lower their emissions to the point where the super stack, which is an icon in Sudbury, will be dismantled because it's no longer needed because of the low amount of emissions that are coming out of their smelter. So, we want to be a part of that. We really strive to, and we're expected to. And we want to, be supplying these metals in the very short term, within the next 3 to 5 years.
Yeah, I mean, you can't. I mean, Martin, you can't sit on your laurels. Although this is great what you can do, but the rest of your business needs to, follow suit and needs to be as efficient as possible and needs to kind of meet these standards. He's going to regulate these, Mark. He's going to tell you you're doing it right. The financiers?
Oh, no, I mean, that's the, what A, there's the developing the technology, and then there's B, actually, developing the standards and reporting to make sure that, the investors get clear, reliable information, and all the participants in the chain get it. So, with the EU putting carbon taxes in place, that discipline of having to carbon count as you use materials through the chain, I think, if things haven't been developed by then, that's going to be the thing that'll sort of push it through the system and have, ISO, there'll be an ISO, like there is for other reporting things, there'll be an ISO standard for carbon reporting.
What's your take?
And on the carbon credits themselves, the analogy I would make is to the debt markets. You've got junk debt. So that's That's nature-based carbon offsets like the forests. And then you've got AAA debt, and that's the carbon mineralization of the type that can occur in these types of ultramafic settings. And there will be, I think, there will be independent sort of agencies that grade these credits accordingly.
Right. And gentlemen, you're all in the same space. We can't leave without you talking about what's going on in the nickel market. Mark, you're a regular visitor to our battery show over at cruxinvestor.com. Do you think there's any more clarity after what's been a sort of tumultuous kind of 6 weeks or so? We've had obviously Russia come into Ukraine. We've had the LME debacle. Is it moving to some sort of a semblance of normality? Is price going to sit between that $30,000-$60,000 range?
Yeah, no, I think we've seen the nickel price actually trade now for more than 5 minutes a day. It's not limit up or limit down yet. So I think it's settling in a range that to me makes sense, sort of just north of $30,000 a ton. Again, there's still going to be a huge amount of volatility. There's a little, only when you ever have a little inventory and then gargantuans on either side of the trade are trying to shove the market one way or the other, we're still going to see a lot of volatility over the next while. But I think we're through the worst of it for now. But again, to my mind, it just blew up all these structural issues in the nickel space that, all three of us, as Canadian low carbon, potential nickel producers, are going to, very, very much benefit from.
Right. What's your take, Martin?
Yeah, it really highlights it highlights the tremendous concentration of geopolitical risk in the global nickel supply chain, far more so than exists in copper and zinc and other major metals. So much nickel comes out of places like China, Indonesia, Russia, countries that are frankly just not allied with European and North American interests in a lot of different ways. And so, the question then for European and North American automakers and for consumers is, will they be able to take nickel from these places, or will they have to really defer back to accepting nickel units only from Canada and Australia and other more allied countries? I wouldn't be definitive that they will commit to doing so. I think that's going to have to be led by consumers and regulators as well. But the winds are certainly blowing in that direction. And again, this is not the first sort of geopolitical ruction we've seen in the nickel market, and it's not going to be the last either.
No, no doubt. The molecules need to flow a different way, but how that eventually flows into the market, what price and where from will be really, really fascinating. I mean, Jason, if you look at a company, you're a little bit smaller than the other two guys. What does this sort of volatility do for you? Is it a positive thing or a negative thing, or just the fact that people are looking at nickel so keenly? Is that quite helpful for you?
Yeah, obviously nickel has become much more topical, I think, just to the general retail investor, and people are trying to understand. But I think volatility like this is not really good for anyone. And just to add a little bit to what Martin and Mark were saying, the LME, I think, has a lot of work cut out to kind of regain confidence in the buyers again. And my prediction will be there'll be a lot more shortening of supply chains and a lot more vertical integration in the business. And, that could be very positive for companies like ours, where, other battery manufacturers and electric vehicle manufacturers are looking to source good supplies of low carbon nickel in the future, and not counting on just being able to buy on the LME, where we obviously have seen that the price can be really manipulated.
Well, do you think it needs to be radically overhauled then, Jason?
There's definitely an overhaul, and whether it's radically, but there definitely needs to be an overhaul. I don't know where it's going to go. I hope the LME can get things straightened out and regain confidence, in the market. But I think that there definitely needs to be changes.
Right, Mark, you're a keen user of the phrase, we need all of the nickel. The supply demand fundamentals demand it. You demand it almost on a weekly basis with us. So you're a big fan of all nickel producers. What do you make of Canada's contribution to that going forward?
Yeah, no, I mean, that's, a couple key data points for investors here. North America is going to need, producers in the space say, 300,000 tons of nickel just for the EV market by 2030. The number for Europe is 450,000 tons. Combined production in Canada and Europe is 200,000. we need 500,000 tons of nickel supply by 2030. Again, I don't think that the supply chain some people have, and we are in discussions with some of those groups. But then there's again a surprising number of people who just think that the nickel is going to mysteriously appear. And so number one, that's an opportunity for investors. Two, in terms of the different commodities, the carbon curves have different shapes. And so nickel is one of these ones, as both Martin and Jason, there's a huge amount of supply, has a huge carbon footprint. So if you can identify those companies that are in metals where there's a massive difference between the first quartile and the last quartile for carbon, that's going to create, a huge amount of opportunity. And again, just broadly, you get these massive shifts in things once in a while. And, the internet was one of those, carbon, literally, you need to think about, where the world is going with carbon in the same way sort of the internet shook things up. And so, investing early in the internet in the mid 90s was a good trade. And, lots of bricks and mortar retail disappeared. The same thing here, the market is going to wake up to that fact at some point, and projects like all of ours that are in places with low carbon power, that again, Martin and I have the magic carbon eating rocks, will, are going to be massive winners, right? It just might take a little longer than you think to get there, but put your money in and wait, and it's one of those once in a generation investing opportunities.
So it sounds like a good time to invest, Martin.
Yeah, I think so. And I think we still continue to see a deep disconnect between the price of the commodity and the price of the underlying companies. That will correct over time. Saw Jeff Curry from Goldman Sachs on CNBC a couple of days ago, and he talked about the last sort of commodity cycle really kicked off in sort of 2003-4, but it wasn't really until 2005-6 that the sort of the underlying major company equities really, really moved, and that they got those major companies got a real full green light from their investors to deploy capital into the next generation of mines. And so if you're looking at that kind of time lag, I think, the next couple of years are going to be really interesting.
And Jason, final word from you. We need all nickel. We're all violently agreed on that, especially the highly leveraged ones like yourself.
Yeah, and I think that, the market does have a disconnect right now. And, we kind of look at all three of our companies, and, there's been some improvements, but still not in relation to the price of metals. And obviously our projects are worth a lot more, on paper at least, but we're just not seeing that in the market. So I do believe, that the markets will catch on, and things will sort of equalize into where they should be. And, it's going to be an exciting time over the next couple of years.